everyone, this is John Feneck with the Feneck Commodities Report. With me today is my podcast partner, Don Durrett, founder of goldstockdata.com. Hey, Don, how are you?
Great. Looking forward to talking to NexGold today.
Yeah, this should be a really good one. We're both shareholders. I know your partner, Larry, is a shareholder as well. So, we have a lot of skin in the game with NexGold. The symbol is NXGCF in the States, NEXG in Canada. We'll have that in the show notes for everyone. And we'll be bringing the CEO, Kevin Bullock, on in about 10 minutes. Don, let's talk a little macro. We have seen some serious moves here since October 17th in terms of the junior prices in particular, just moving quite rapidly up and down. What do you make of this, and do you think that investors need to be concerned, or is this just a blip in your view on a longer term chart?
Absolutely a blip. So after it happened yesterday, I was so bullish. I mean, it didn't bother me. The gold went down 250 points. I was really bullish, so I started scribbling down notes.
Okay,
you can see that. Can you see?
It's hard to see. It's hard to see. At least from my perspective.
For some reason. Oh, there you go.
There you go.
The
That's
angle. So I scribbled down a bunch of notes, and I wrote an article on Substack called "It's Over," and I just had to get out basically to show people that this downturn in gold is that's not where we're going. We're going the other direction. Gold's going higher, and these are the reasons why. And I kind of had to write it all down. So first I wrote the notes, and then I wrote it out and published it. It took me, I don't know, hour and a half to write it or something. I just feel that this breakout in gold and silver is really the story. The breakout in gold and silver is kind of the canary that's telling you that we have a big problem. Gold should not be doing this. If the U.S. economy is correlated to the stock market and GDP is correct, like 3-4%, which is, I think, just misleading. If that's the story, then why is gold keep hitting these all-time highs? Why is gold going up $350 in a single week? Well, Monday in 4 days, Monday through Thursday of last week, it went up $350. Why? Silver went up, I think, $4 last week or more than that last week. Why? Right? It's not a melt up. I mean, the U.S. doesn't even like gold. I mean, the average person, they're not pushing these gold prices higher. It's the East. It's the East and the South that is buying all this gold. And so why? Why are they buying the gold? So I had to write that article, but I really feel that kind of the bell's kind of getting rung here. And the only thing that's left, the absolute only thing left, is the S&P 500, the stock market, to roll over and the U.S. go into a recession. That's what gold's been signaling. Gold's been signaling there's a problem coming here, people. Get ready. Get ready. Yep. That's what gold's saying. Get ready. And everybody's ignoring it. The boomers have more money in stocks now than they ever have. I mean, it's kind of crazy. Everybody's been chasing the stock market, because we've been in this unbelievable run since 2009. People think it's going to go forever. But in actuality, the end is near. And gold is the winner here. The gold's the winner. When the stock market finally does roll over, gold's going a lot higher. I know Pierre Lassonde said by the end of the decade, $17,000. And we're going higher.
Yeah, so let me jump in there. So if gold's going higher, what happens to gold stocks? You and I get that question all the time, right? Like, that's important to our viewers because they have so much of their money in gold equities as you and I do. So what's your take there?
I think right now the key here is the multiples, the free cash flow multiples, and they haven't went up because Wall Street hasn't gotten involved yet. You have under 9. Newmont right now is free cash flow multiple is under 9. I think it's going to go north of 20. So you're buying that stock for less than half off. Well,
Okay.
the average free cash flow multiple when we had a mania in 1980 was 22, and I think we're going to get a
I
mania
didn't
this
know that.
time. Now we might not get to 22, but I think we're going to get to the high teens average. So
Yeah.
the strong companies like Heckler and Koor, they're going into the 20s. I firmly believe that. It's currently at a 9. So Agnico Eagle, which is probably one of the best companies out there, they have a 13 multiple. It should be at least 18. So these multiples are, less than half of where they should be. And so that's the key. It's basically showing you how cheap these stocks are. I mean, you can't really find really pricey stocks right now. They're all kind of cheap, especially the silver miners. Even though silver is rich to 50, these stocks really haven't really performed. I mean, Coors it was at 22, now it's back to 19. But I think it's going to 100. So it still has huge upside left. Now, to get to 100, we got to get to $125 silver. But I think silver is going to go somewhere between 100 and 150. And so the median there is 125. So I think 125 is a good target. Now, I think gold is going to go probably to 6 to 7,000, maybe 8. And so I think 5,500, 6,000 is a really good target for gold. I think 5,000 is around the corner here, right? So 5,000 is way, way too low as a target. So 5,500, 6,000, 6,500, somewhere in there. So the miners have huge leverage to that because the multiples are so cheap. And then multiples need
Okay.
to expand. It's like PE expansion, right?
Yeah, that makes totally good sense to me. Yeah, I mean, because when you look at the earnings growth in some of the names you just mentioned, like Core is CDE, Hecla is HL, Newmont is NEM, Agnico is AEM. Go take a look at the earnings results for the last 3-4 quarters on these stocks. It's unbelievable. If these said, technology ABC, technology XYZ, these things would be roaring higher. But of course, they're boring mining stocks that aren't owned by anyone in the public, right? So like they're going to be heavily owned in 2026 to 2028, in my opinion. And that's why this earnings season is going to be interesting because right now we're kind of at an impasse, right? Like the broad market is doing quite well. Let's face it. I mean, yes, it had a little bit of selling today, nothing that broke any resistance or support levels, though, right? So you see these little hiccups here and there, but the trend is still quite good for people owning the S&P, the Nasdaq, and the Russell. I would just caution that there will be what we call a sector rotation, people, into stuff like Don's named your 4 names right there, because the free cash flow is just going to be enormous here. Whether you're a gold producer or a silver producer, it doesn't really matter. The cost per ounce that you're going to be dealing with as a company is so low versus the cost you're realizing by being a producer at the right time. And those multiples will change for the better. So I totally agree. I mean, we're right on top of earnings season right now, right? Like we're going to see a lot of things here in the next few weeks coming from some of those names. And for those of you that want to take a look at some of the producing names in an easy way, just Google search GDX Holdings or GDXJ Holdings. You can get a whole list of every single stock that's in those 2 ETFs, and you can get an idea of some of the names that Don just mentioned and I just gave you symbols for. Don, just one more point here. You and I just spoke at Beaver Creek, a month ago. We had a packed room there full of executives, both from the company side as well as some clients attending like you and I. And we did about 45 minutes at the front of the room, got a lot of great feedback. I'm going to Zurich in a few weeks to speak there at their other events. You've got a number of things that you're doing next year up in Canada. It's exciting times, and we've got our U.S. conferences coming up May 17 through 19 in Washington, D.C. I spent 25 years in D.C. I know a ton of people there, and a lot of these people have actually hit me up over the last 6 to 12 months. I haven't talked to them in years, and they said, "Hey, man, I saw you on YouTube, and I'd love to catch up with you about gold and what's happening." Many of these people are financial advisors, and it was really shocking to me because there's some Merrill and UBS guys. These aren't little small brokers. These guys manage $1 billion, $2, $3 billion. And they're getting interested, and that's really bullish. And that's what I think people are missing, is that this kind of a year, you've had Bitcoin do reasonably well, real estate do okay, broad markets doing quite well, our sector's doing great. It's sort of a melt up kind of year, in many ways. There will be a divergence, and that's what people need to prepare for, where we're going to continue higher. Gold's going to continue higher, silver, but also the miners selectively. and a lot of the other stuff is going to start, dropping off. So we really we would like to encourage you as a listener to attend some of these conferences. Don and I, don't do a lot of them, but we do enough to where we really do the homework that we're asking you to do. We sit down with CEOs like you're about to hear from and ask them pointed questions for 30 minutes and really get a sense for where that company is in the Lassonde curve, right? So Don, any thoughts there about the conferences and just in general, how an investor can educate themselves?
Yeah, I think going to conferences and talking to companies is very beneficial, especially stocks that you already own. You just become more confident and you
Right.
you have a better understanding of the stocks you own. So that's very useful. And then finding new companies, new stories. But every conference I've went to has been uber useful for me. I've always came away with it. Glad I went.
Good feedback. Thank you. Well, let's bring on our guest here, Kevin Bullock, who is the CEO of NexGold. They are just in the middle of a capital raise here. They announced just, about a week ago. Hey, Kevin, how are you today?
I'm very good, John. How you doing?
Very good. Thanks. Don and I are happy to
Kevin,
have
great
you.
to have you on. I've mentioned several times that NexGold was like one of my favorite development plays, but that was back when you were like 150 million, when nobody cared about your stock. Now you've doubled, but you're still cheap. And it was crazy how cheap you got. I mean, it was insane.
Yeah, well, you, John, and I cared, but not many others, right? And so thank you for getting the word out. And I do really well at going to the conferences that John's involved in, and we're going to be going to Washington and Florida. It's these things where people get to ask the pointed questions and get the right answers. And I think the best promotion that a company can do is say they're going to do something, and then the next time they see somebody, tell them how they did it instead of making excuses. So, we said we were going to get our permits, all of our provincial permits. The last time I was on your show, we got them. I said by the end of the year, we'll get our federal permits. That's going to happen. And then there's been a lot of other news that we're going to talk about. But I just think that these conferences, as to what you guys are saying, they're very important because you get a little more knowledge and color than you'd get any other way, direct from the horse's mouth. So they're very good. I mean, we will be going to one in London and Zurich as well. John, the last time I spoke to you wasn't long ago in Stockholm at the Nordic conference. So,
Right.
these things are valuable and they do help get the word out. So, our little $100 million market cap company is now 350 or so. So, and it's still early days, as you were saying earlier.
Yeah,
And this
absolutely.
pullback in the price of gold, I think this pullback and fill is really, really healthy for the longer term price. I think that this is going to turn right back around and slam back up. I was a little worried at how fast it was rising. It was a hockey stick. I'm Canadian. I have to use that. It was a hockey stick chart, and it has to, every so often these things have to, backfill and that's what's happened over the last couple of days, and it scares the heck out of people, including me. But when you've got a long-term view, it's just a momentary blip.
Yeah, absolutely. I was just looking at a chart of the NASDAQ today, QQQ, and when you look at the destruction in early April in that chart and what it's done since,
Yeah.
I mean, things tend to bounce back, and the downturns happen faster than investors are used to. Like if you look at 2000 to 2003, it was like a long malaise. You're not going to. I mean, I know Don and I disagree here. He thinks the U.S. may become like a Japanese-like economy in the future, where you have like months and months of pain. I personally feel you're going to see more things like COVID, where it's 2 months here, 1 month there, and it's like shockingly, the price action is shocking, right? Like it has been for the last 3 days in our sector. And you have to be prepared for that as an investor. And most investors are not prepared. They just want to complain. Like John, how am I down 25% on NexGold in like 3-4 days? Well, hey, you know what? I mean, it did go from 50 cents in the last interview to $1.30, right? So like you had plenty of time to sell on the way up. Everyone's different, right? I don't know the risk tolerance of our investors, right? Like unless they're actually working with me. But I tell people like that's why Don and I literally say all the time, we don't have the perfect entry point for you. it seemed clear on your chart that the 50-cent range was a great buy because the stock was just consolidating there for weeks and weeks and weeks. It's like in a bull market, those things tend to break higher.
Yeah, agreed. And we were doing a bit of consolidation again. I mean, we did a financing, which obviously adjusts the price. We did a very large financing, which was fantastic. So, that adjusts your price and your trajectory for a small period of time. But it's a bought deal. It was oversubscribed. It was fully subscribed within a day. Books were closed.
Wow.
We should close the financing by the end of the month because it is a 4-month hold private placement. It takes some time to fill out all the documents, et cetera, but closed by the end of the month. And that, will become a condition precedent to the Appian project finance of 175 million US that's sitting there in a letter of intent for us right now. So our view on this financing is we'll be fully financed to build the mine based on the equity, the project finance, and the equipment finance we can have, along with the in the money warrants that we have currently. So, we look at if I listen to Don, which I do, because Don's got a good perspective on all this stuff. I think that if we're looking at a gold price higher than 3,000, never mind 6,000 that Don's saying, but a gold price higher than 3,000, each of our two projects is worth over $1 billion NPV. And we're a 300 million market cap company. I mean, we haven't started yet.
Right.
So it's about getting the word out, getting the knowledge out at these conferences and through other means, and actually doing what you say you're going to do, so that every time you speak to someone, you're telling somebody what you've done, not what you're about to do. That you've actually accomplished what you said the first time, and now you're going to do more, and getting that trust in the team that's going to build a mine.
Yeah, I mean, it's like in finance, it's all about relationship building. I had the same territory for 25 years. When I go out there and talk to brokers, literally 100 times in 25 years each, you know everything about that advisor. You know everything. I mean, if you're a good salesperson, you take notes and you hold like you were saying, you want to be held accountable. It seems right. Like a lot of mining execs don't want that. They just want to tell a story to get a quick buck and get, volume in their stock. And it's very disruptive for shareholders because many of my guys are looking for a 1 to 3 year hold. Don's even longer, right? We're not looking to buy NexGold at 50 cents and get out at 60 cents. We want to see like an opportunity that we can invest in over time. Yes, some things like critical minerals could be tradable because some rare earth stocks are up 1,000+% this year. I mean, you're not going to hold these things for years and years when you have 1,000% gain in 3 months, right? It's like take some money off the table, absolutely. But in a hot gold market, like you had just said, if your market cap is roughly 300 million and roughly the projects are worth around 2 billion, that's a 6.5 times return, right? It's like just doing the simple math.
Yeah, and if you take Don's gold price number, double that number. So
right.
It's quite incredible. And I remember, I think it was yesterday. Was it yesterday or the day before? A gold movement was almost $300 in a day and a half, sort of thing. I remember when we purchased the Macassa mine, a group of individuals, when the gold price was $297 an ounce. Like those moves that you see today, you would have never have seen before. And the reason there's big moves like that is because of all the issues that are going on in the world and the volatility. But that all means there's an upward trajectory over time. These dips are healthy.
Mm-hmm. Yeah. So you were on the show in the spring. Do you want to give us just maybe a 6-month recap of what's occurred at NexGold, and then if you could follow through with maybe like what's the game plan for the next 1 to 2 years, if that's in the deck somewhere, that we don't have in front of us, you can reference that for investors as well.
I mean, what we've been doing at, for instance, in Goldboro, in Nova Scotia, we've done an infill drill program, 25,000 meters, to de-risk the area of the pits. In other words, within the volume of where the pits are planned, to de-risk it, not to make it bigger, not for any other reason than to de-risk the project as we move towards a final construction decision. And those results are now being put into a new wireframe and mineral model that will be used to update the feasibility, because the feasibility we have is old. So it has old costs associated with it. But more importantly, it was done at $1,600 gold, which makes me laugh today because the long-term gold price is much higher than that today. So
Sure.
redoing the fees, in my view, is there's going to be inflation in the capital costs and there's going to be inflation in the operating costs. But the delta between that and the new gold price we'll use is expanding tremendously. And, that just makes for a better project, and not one that's going to happen sometime in the future, one that is going to be built next year. So you've got this, I don't know where gold's going to be 5 years from now, but I know where it's going to be a year from now, or at least what it's going to be above. So things that are going to be built soon, in my view, have more value than things that don't have a date set yet and don't know when they're going to get their permits and don't know if they're going to get their First Nations agreements in place. We have all that. And it's just about updating the fees and moving forward and sticking the shovel in the ground and turning it into a gold shovel.
Excellent. So could you walk us through, is there a slide in your deck that people can reference that kind of looks at the next, 2026, 2027 as you advance the projects?
Yeah, we haven't put that together yet, but I can tell you now that we're looking at having the mineral resource done, the new mineral resource done based on that infill drilling and extensional drilling to the west of the current resource by the end of November. That is we're going to be starting our feasibility update on November 1st, so in a couple of weeks. That will incorporate that new mineral resource in when it's done, but also we'll be updating costs of the process plant. We plan to have that done by around sometime in the second quarter of next year, hopefully early in the second quarter. And the final investment decision will be made by the board prior to that, having knowledge of the mineral resource, because then we know the fees will obviously turn out positive. And we plan on starting to build before the second half of next year. And then it's a 22-month build. So we'll be producing in 2.5 years. What that does for us, though, is it gives us time at the other project. We'll never build two projects at the same time. It gives us time to optimize Goliath Gold Complex, because this is 3 separate areas of mineralization. And we think we can optimize that by looking at the placement of the infrastructure in a different way now that it's a wholesome project instead of just the Goliath pit. It's the Goliath and Gold Line, so we call it the Goliath Gold Complex. So we think we can make that even look better than it already is while we're building at Goldboro. And the premise of this company of having this pipeline of projects and building one after the other to become the next mid-tier mining company is really coming true with these 2 projects to start with. And then we'll up our M&A game and finding a third project as we finish building the first one and go on to building the second. So, we're creating something that isn't, the $2 to $3 billion valuation of building one mine. We're creating a company that's going to build several in great jurisdictions. And the first 2 are in the company already. And I don't know any other company that has 2 advanced projects in Canada that can be built in the next couple of years. It's amazing, quite honestly, what we have in this little company.
So
I agree with that.
Just playing devil's advocate, wouldn't you consider possibly not doing anything M&A for quite a while as you have these 2 kind of crown jewels?
That's correct. So we're always looking at opportunities, because sometimes they happen at the times they happen, and you can't fix that timeline. I mean, we don't plan on doing anything while we're building Goldboro. But certainly when we start building Goliath, we'll need to be looking for a third. So right now we want to be building one, permitting one, move to building that and getting another and permitting that, and keep going until we become the 400,000 to 600,000 ounce a year producer. So we're talking multiples of the multiples we mentioned earlier with more projects. It's very exciting times, and especially in this gold price environment. Yeah, we've come down a little bit after the last couple of days, but think about this: 1 week ago, we were lower gold price than we are today. So these things are moving around like crazy. But when you look at the overall trend and you look at the linear regression numbers on where gold should be, I mean, this is just a normal, healthy pullback.
I agree. Could you give us what the all-in sustaining cost, the AISC, looks like for both complexes?
Yeah, so the AISC out of the 2022 feasibility study for the Goldboro project in Nova Scotia was around $850 an ounce. That is by far in the very, very low end of the lower quartile of costs
Right.
and basics around. That obviously will not remain that number as we update it. I think it'll be, my guess is it'll be around the $1,200 number now with inflation and et cetera, cost of labor. So still, it's still in the low quartile. I think the average of the producers now is 1,700 or something like that. So, it's very, very low. And when you think of a long-term gold price of high 2000s, you're making more than 100% delta.
Right.
And at 100,000 ounces a year, that's a lot of money coming into. We'll be producing more than our entire current market cap annually. The costs are around between $1,400 and $1,500.
Okay. I thought that was lower. Did that get updated?
No, it hasn't. It hasn't been updated. It's that's my inflationary guess on what the new cost will be there.
Yeah, still very much
still a great margin. I mean, that's still still almost 100% margin.
Yeah, for sure.
I mean, it's just incredible.
That's fantastic. Well, it's a nice problem to have two great projects of size in a country that's getting more supportive, right?
I think that the important thing to note is that the projects have a lot of upside on the regional targets and even on the extensional targets. I mean, Goldboro, for instance, we believe we've latched on to an extension to the west side of the West Pit that's probably going to be another 300 to 500,000 ounces of open pittable material. And then there's regional targets that are lookalikes to Goldboro that can duplicate the resource. And then there's 300 square kilometers of ground at Goliath there's 3 deposits found already, but there's a lot of targets that haven't been tested yet. So there's a lot of upside. It's in a good country. And I've never seen a situation where everything is lined up. This is my 40th year in the business. I've never seen when the gold price is at its peak, the governments are on side to want to do things. The First Nations are on side to want to do things. No opposition to the project, fully permitted in a first world. Always in my history of 40 years, there's been one or more of those off that creates an issue. The ducks are lined up so well here. I mean, it is, they're quacking. It's time to feed them.
Love it.
Hey, Don, I'll turn it over to you.
Yeah, Kevin. So now people know why I've been pounding the table on NexGold for quite a while now. For me, it's all about location. Location is just fantastic. It's actually, I mean, Canada. I'm a big fan of Canada and Australia. Those in the U.S. Those are like my 3 favorite places. And if I can find a development story that's cheap, that checks all the boxes, and I use a system, and I use check boxes and make sure that companies, they check all the boxes, and you guys absolutely do. I mean, basically, strong property. 2 of them. Not you have 2 strong properties. I like to find development projects that are at least 1.5 million ounces of gold. That way, you get 70,000 ounces for 10 years plus, something like that. That's kind of my minimum. And then once you get to 2 million, it gets better. Once you get to 3 million, you're kind of really in the sweet spot. Anything above 3 is actually, but once you get above 3, it starts to get dangerous because the CapEx starts exploding.
Yeah.
And so you guys, your CapEx is doable. $250 million, 3 million ounce project, long life, high grade open pit. So you have the great project. Everything kind of clicks. Everything works. The IRR, the MPVs, everything's really good, really strong. Then the location, you absolutely cannot beat the location. Management team. I mean, a lot of these development teams, they're young, they haven't done it before. You're gambling on them. You got 40 years experience, so the team's strong. The path to production for me is usually always a weak point. Not you guys. I mean, you guys have had a strong path to production for quite a while. which is fabulous. I mean, that's the one thing I always gamble on is a lot of these companies, a lot of these development projects, they don't know exactly what they're going to do. They don't really want to tell you exactly their plans. And I like it when you know the path to production and then the valuation. So valuation, you guys have just always been just super cheap. Even now, okay, so your stock has basically doubled. I don't know, last 6 months. So, but as 100,000, I always use future gold prices. I don't care about the current gold price. So at 100,000 ounces, if your AISC increases to 1,500, so it's currently it's coming down 12. So if it increases to 1,500 and goes at 5,000, that means you'll have $2,700 margins. That's 270 million in free cash flow. I think that the Canadian stocks will get high multiples because of your location. You'll get a premium. So if gold's at 5,000 and we have these high premiums, you're going to get these high multiples. So you put a 15 multiple on it, that makes your market cap $4 billion. And that's only for Goldboro. So it's basically, I've been telling people, you get a 10 bagger just for Goldboro, and then they have another project that they're going to build right after this one. And then you're talking about M&A of doing a third one. So the other checkbox is insiders. And so you guys, for me, I define insiders as investors who are not interested in a short-term return. They don't care about, okay, somebody comes in and goes, okay, I'll give you an 80% premium. They're like, no, I'm in this for the long. I want my 5-bagger. I want my 5-bagger. This thing's got 5-bagger written all over it, and you want to give me an 80% premium? No. And so your company isn't for sale today. But I always worry because it's rare. You just mentioned that. It is rare for Canadian companies, individual companies to have single projects, double projects. Because every time a company builds a mine, they get taken out. Blackwater was like the first one. They built their mine, and now they're in play. Now Maritime, they're kind of a smaller mine, but now Newfound Gold. And now Scotty wants to build their mine. Then you got West Red Lake Gold, who just turned theirs on. But these are all recent things, right? But these
well, you had Valentine too in Newfoundland that was acquired. So
yeah, and so these projects, they get taken out, and so I worry about that because I want to hold your company for 5 years and get you to go to 400,000. I mean, you're a $4 billion company at 100,000 ounces. Just think what you are at 400,000 ounces, right? So you have this massive potential. So is your board basically saying, okay, we're going to build a big company here? I mean, is that kind of your plan?
Well, the board and major shareholders are certainly saying that, and that's what I'm here for. I'm not here for, I'm here to try and build something special. And really what attracted me to this whole idea of getting the companies together to form NexGold was that we're going to build these smaller projects one after the other to become a mid-tier so that we actually sneak under the radar of companies coming after us. And I truly believe the best poison pill we can have is the right people to execute on what we're doing. And so companies generally get taken over when kind of the management and the directors kind of put their hands up and said, we've done enough and it's just too risky for us to try and go forward and build this and do this. Well, I mean, we just hired Brian Jackson, who's our VP of projects. I mean, this guy was brought in to fix Cote Lake when it was having issues. I mean, he's built things on time and on budget. That's been his history. And he's building the owners team for this so that we can execute. Because right now it's not about discovery. There's discovery still in what we want to do. But the projects, the Goldboro being built, it's not about discovering anymore. We'll discover more along the way, and it's not about getting permits anymore. It's not about trying to get an agreement with First Nations. All that's done. It's about executing. And if we execute, I can't say this, but I can say the numbers will look like you're talking about as we go forward for the value in this company if we execute. So it's all about execution and getting the right people and people that have done this before.
Right. Yeah, that's beautiful. I really like that answer. So I actually think that, gold's going to go up tremendously. So a company like yours is just going to get uber valuable. It's amazing to me because I've been talking about your company. It was, under 150 million market cap. It's amazing to me that Wall Street and Canadian, companies as well, because there's a lot of Canadian investment banks as well. It's like, everybody's ignoring you. It's like, no, it's like, can't you see? I mean, come on, people, can't you see the potential in this company? You don't want to own this company. It's like, it's mystifying. So your company will remain cheap. So you're like 365 million at 90 cents US, but you will remain cheap, if you believe it or not, all the way up to $1 billion. In other words, people could buy your company all the way up to 1 billion and it would still be cheap, which is mind blowing. That's how cheap you are. It's like nobody wants to own these mining stocks. Nobody believes. They don't believe you're going to be able to execute. They don't believe gold's going to go higher. They don't believe that your costs are going to, you're going to stay low. Everybody just looks at the risk factors and they focus on the risk factors instead of focusing on the price. If you look at the risk reward.
I think, sorry, Don, sorry to cut you off. I think that'll flip as the gold price keeps going up and more generalists come in and other people come in. Then they'll be buying anything with the word gold in it. Whereas, over the last few years, it's sell anything. Find a reason to sell is going to flip to find a reason to buy.
Yeah.
Yeah. So that will happen. That will happen when the stock market in the U.S. stops going up. Exactly. Once it stops going up and people can't make money in stocks and they're losing money, that John mentioned this. People will rotate out of their S&P 500 stocks and into the mining stocks because those are the ones that are going up 30, 50, 100% a year. And they won't be able to ignore it. And that's where the Canadian stocks really start shining because they're like, I don't want to own those African stocks. I don't want to own those South American stocks. Give me those American and Canadian stocks. And they're like, which ones are there? And your company's going to stick out like a sore thumb up until about $1 billion. But I think it'll rip to $1 billion.
Yeah, I don't disagree. And again, it's all about execution and we've got the right people to do that. And we're doing the right things. And people didn't believe we'd get our environmental permit, and then we got it. And people didn't think we were going to get our provincial permits. We got them. People didn't think we were going to get our Schedule 2 amendment federal permit. We got it. People didn't think we were going to have a big resource. We do, and it's growing. So we plan to keep on proving the non-believers wrong. And make believers out of them. And you know what? I don't blame them because there's a lot of missteps, but this company will continue to be successful and will execute on its plan.
Fantastic. Thanks for being on the show. That's all my questions.
Good seeing you, Don.
Thank you so much, Kevin. We appreciate you coming on. And as Don just pointed out, I mean, there's from a $300 million market cap to $1 billion is a long road. So if people are non-believers now at 300 million, maybe they buy at 500, 700 on the way up, right? Like it's not too late is a good thing, because some people want confirmation for higher highs on a chart, and they don't buy dips like this, which I think is a mistake. But not everyone's built the same. So I think Don and I will summarize now for investors, and I'll catch up with you probably in Zurich, Kevin, in a few weeks.
We'll see you there. Thanks very much, guys. Good to see you, Don. Good to see you, John. Bye-bye.
Our pleasure. Thanks. Don, your summary.
As long as gold prices go up, this company looks fantastic. It's in, anything that's in Canada, I think is ideal location. Long life mine, strong economics, a nice pipeline. Like I said, it checks all my boxes. That's what I look for. I mean, first place I go for is low, undervalued producers. That's where I start. That's my number one focus, undervalued producers. I want to own as many undervalued mid-tier producers as I can. And then second is high quality development stories like this who turn into producers. So I want to own as many producers as I get my hands on. So I own a lot of developers because I want them to turn into producers and I want to buy them cheap. So producers make money 3 ways, and that's what I really like about them. They have, first of all, they have massive elasticity. So if you're a producer, if the price of gold goes up, your revenue goes up, your margins go up, your balance sheet improves, the valuation of your company goes up just on the price of silver alone. It's got this massive elasticity. So you got that going for you. The second thing you can do is you can do exploration, find another mine, build another mine. So you can grow production through exploration and development. And the third thing you can do is you can acquire other companies. So you got three ways to grow your company, which is it's a beautiful thing. But the key to it is you need a bull market, which we now have. If you get a bull market, these producers can just do phenomenally well. I always tell the story. First Majestic, I bought a little over $1 in 2009. It was at $25 in 2011. So 25 bagger in 2 years. And so that's what you're looking for. That's what you're looking for. This one here, it might not be a 25 bagger in 3 years, but it's got a really good chance of being 15 plus. And so that's what you're looking for.
I think that's a great summary. In talking to Kevin and other execs at the company now for a couple of years, well, Kevin most recently in about a year because of the deal with Signal Gold, his old company, and NexGold. It seems like Nova Scotia is one of those parts of Canada that people are. It's almost like Mali in Africa, where they're giving it a discount because of other things that have happened in the region. They're not doing their homework. I mean, they have every permit they have except for the federal, and he's pretty much telling us here, which is kind of his opinion, okay, but like there's a deadline here. It's this year. It's not next year. It's this year that the Fed permit is going to be a yes or a no. If it's a no, negative for the stock. If it's a yes, positive for the stock, and I think it's going to be very positive because people will then start saying, okay, this is de-risked, right? Like that's what holds a lot of people back, as you and I know. They wait for a permit. Like we just interviewed Sonora Gold, right? Like they just got done telling us emphatically yesterday that they're in line to get a permit within 6 months. Yet the market doesn't believe it. So they'll just wait to double pay, right? Like it's just, so we don't want to buy it at 13 cents. We'll buy it at 22 cents instead. NexGold trading at 90 cents, 90 and a half as we record this. Buy some now and buy some later, right? Like that's sort of how I teach my clients. It's like we're never going to get the entry point correct. So you have to look at it like if you want to allocate 10 grand into a stock, buy a third now, buy a third during tax loss season, and buy a third when you get confirmation on the permit.
Right. I mean, so what I do is I just don't use really big allocations. So I kind of take the emotion out of it, and lower my risk by not taking a big allocation. I mean, a stock like this, I'm like 1% or less.
Okay.
And that's my maximum. So I'm like, that way I don't lower. Like a lot of people, like they'll leave 20 stocks, they put 5% in each one. And I can't do that because it's too emotional. I mean, if you have a big portfolio, you got 5% in one company like NexGold, and you're sitting here, you're waiting to do anything can go wrong, right? We don't know. Things can bite you. The unexpected can always bite you. But if you only have 0.5, 0.75, 1% in a high risk company like this, something goes south. Maybe you don't. Instead of making a 10 bagger, problems. Maybe you only make a 1 bagger or something like that. But so that's what I do. I just keep my allocations down to keep the emotions down, keep the volatility down, and that's how I do it.
So we have about, as of September 30th, I think about 1.5% in NexGold. And when I look at my overall portfolio, one of the constraints I have when I was at Sprott and advising at BlackRock was, no more than 5% in any one name, right? That's very common in the US. And it's very limiting in a hot market like this. So I have an 8% position in a tungsten stock called Guardian Metal, which you and I have talked about before. This thing, I started at 17 and a half cents. The ticker's GMTLF. It ran to $2. And if you look at the chart now, you can see that $2, was hitting like a ceiling. It wasn't going to 202, 203. It was stuck there, which was the all-time high. But now this stock today is at $1.29 as we record this, which is an unreasonable discount from where it just was a few weeks ago, right? Like so charts are really important. It's not the whole picture, right? But it really helps you understand, okay, I didn't get it really cheap, but I also didn't pay up at the all-time high. So now when you see a retracement of an X%, you have to get into these things, right? We saw the same thing with American Tungsten, which is the other junior we own in tungsten in the US, which is TUNGF. stock just ripped higher. I called the CEO and some other people in the company that were large shareholders, and I said, "Hey, what's going on with this thing?" And they didn't know, right? That's just telling you people are piling into a little stock and they don't know how to buy it. That happens in our sector all the time, every single day. We're going to see a lot more of that, I think, next year as these prices are still making like close to all-time highs, right? If you look at a price of tungsten, for example, going back years and years, the price was nowhere near here, at all. That's why we're excited about some of these stocks, is that as a company like maybe Triumph Gold, who we had on the show, I think, TIGCF, John Anderson, these guys have 15 million pounds of tungsten, but the last time they updated their PEA was 12 and a half years ago. They don't have any money to do it, right? Like it's not because they don't want to do it, but now they're in I guarantee you, those guys are going to raise some money. They're going to update their PEA at some point, probably next year. And the market's going to be like, oh my gosh, I didn't realize these guys had so much gold and tungsten. It's like, okay, we've been telling you this on a show like this at 18 cents. You want to buy it at 50. That's your prerogative. But like tungsten, gold, these are minerals that are not going away. We're in a new paradigm.
Right. And the one thing that we notice all the time is these prices are mispriced. These stocks are mispriced. They're just ridiculously cheap. It's like it's just a matter of, of time before they get repriced correctly. So
right.
That's kind of how I look at it. We're taking advantage of an inefficient market.
I wouldn't use the word taking advantage. I know you didn't mean it that way. It's just like we're doing the homework. I spent 15 hours working this weekend. I didn't want to do that, but half of that was research on stocks that I'm trying to get better at. Right? Like I didn't know anything about antimony 2.5 years ago, and now I know a lot about it because I put the time in. Right? But many investors need to put more time in. You need to do the research so that you can have that comfort level. Right? Like you and I are comfortable. We're sitting here and saying, we're not really fazed by this sell-off at all. A lot of clients feel differently.
Yeah, maybe taking advantage of the wrong way to phrase it. But for instance, NexGold, I just feel that it's completely mispriced. At 363 million, when the odds, the risk reward, the possibility of gold going higher, and they build their mine and they get into production, it should be worth a heck of a lot more. Now, I mean, the market, and people say, well, the market is valuing it what it's actually worth. Does that just mean that I'm smarter than the average person who can't figure out how it's worth? I don't agree with that, but it just seems like they're mispriced over and over and over again with these stocks that, I mean, another example is like Avino. You mentioned it when Avino was trading under 50 cents. I mean, I was just going, this is just stupid, right? This is a stupid valuation. You got to price to the bottom. And then Newmont, when it was trading under $30, it's like, are you guys insane? You're not going to buy this stock? That's what I mean. I mean, the market just misprices this stuff all the time. Coeur, right? Coeur's under $3. It's like, what are you in your right mind? You're not going to buy this stock. Nobody wants to own it. I go, are you crazy? So that's what I mean. That's what I mean. It's like, I feel like I'm kind of taking advantage of these markets that they're mispricing these things left and right. And I can go on and on. And so
understood. I think one of the other, well, we have to wrap it up. We can go on for a long time. How about we wrap it here? And if people have questions, we'll have our contact information in the show notes. We really appreciate all you listeners checking us out on these podcasts over the last 2 years. It means a lot to Don and I. We'll keep coming at you with some good ideas here as this bull market continues, and we appreciate your support. Have a good day, everyone.